Good day guys, and welcome to today's video. So in today's video we're going to be discussing how to identify institutional order flow, but this is just going to be a part one series, and I'm going to be dropping a little nugget here and there as regards institutional order flow. There are a lot of quick dives I want to do, but I can't cover a lot of them in this video, but I'm going to be giving you everything you need to know to understand institutional order flow correctly from start to finish. So just stay through to the end of today's video so you understand what institutional order flow is all about. But you can see on the screen there's a banner shouting out there giveaway. So that there's going to be a giveaway on this channel on the 31st of August 2022, and it's going to be a funded account to one of my subscribers, either a FTMO $10,000 worth of funded account or a $100 worth of funded accounts, depending on what the person actually wants or the person actually chooses. And for the general community, we're going to be giving out my strategy that helped me catch the highs of Bitcoin all the way from 2021 March down through to this year. So I'm going to be giving out for free on this platform. But the clause here is that we have to take this channel to 1,000 new subscribers. So if by 31st of August we're able to hit 1,000 new subscribers on this channel, you understand, I'm going to be giving out the giveaway as I've promised, also by the grace of God. And I actually like the support and the likes I'm getting on the channel, so that's actually I want to give back, you understand. So if that is understood, let's just get started. So as you can see right here, institutional footprint and institutional fingerprint. So I'm going to be showing us the footprint and fingerprints of smart money in line with institutional order flow. Why? Because every institutional order flow app that happens in the market are actually sponsored by them. So I'm going to be showing you their footprints and their fingerprints, how they deliver price and how they take price to their objective from the buy side to the sell side, from the sell side to the buy side. So let's continue. So in this video, as I've said earlier, it's going to be more like a general concept. So I want you to think conceptually, you understand? Because once you understand these concepts, you understand, you can go into the chart and easily identify institutional order flow and start making money for yourself. Like if you watch the video I uploaded recently, Essentials to Market Structure and Direction, I really pointed out on a segment of that video how to identify institutional order flow. But that was more for a consolidating market, you understand? So I really scratched a little of an idea on how to catch institutional order flow. But in this video, I'm going to be giving you the A to Z, the whole walkthrough of institutional order flow. Yeah, but there are still nuggets here and there, which I tell you I'm going to be giving us later on this channel, you understand? I can't cover every single thing here, you understand? So I just want you to pay attention, and let's continue. So when we talk about institutional order flow, we'll always want to know, okay, where these start from? What's the point of origin? Because when you live under time, as the case may be, everything must have a beginning and everything must have an ending, as long as we are living inside time, you understand? So everybody that's earthbound, you understand, that's under time, that is under the influence of time, must always have a beginning and an ending. So also institutional order flow. So every institutional order flow in the marketplace has a point of origin, you understand? So when you're able to know the point of origin, it will be easier for you to be able to know, okay, where will it likely end? And that's what the whole general idea of smart money helps us to do. It helps us define, okay, where the point of origin will be, and also where the point of exit will be, where the order flow will actually end, either to the buy side or to the sell side. So when we talk about institutional order flow, we want to know, okay, what's the point of origin? And when we say point of origin, we're actually saying where is that point of liquidity, you understand? Because mind you, I pointed out on this channel, like on how the video we uploaded recently, how to understand market structure. I said every movement in price is from one liquidity to another liquidity. So the point of origin actually must be from a point of liquidity, you understand? So every institutional order flow must start from a point of origin, and that point of origin must be a area of liquidity, you understand? So immediately we see that point of origin being met, the criteria of the point of origin, which is from a liquidity being met, the next thing we want to see is a displacement in price. So we want to see price once it has tapped into that area of liquidity. We don't want to see price linger in that area. We want to see a quick displacement in price. So what does this tell us? It tells us, okay, yes, smart money is present in this market, and sooner than later we're going to start seeing institutional sponsorship, institutional order flow in this new direction. So we don't want to see price linger or being chubby or consolidating in that area. We want to see price respond quickly once it taps into that area of liquidity. So the next thing we want to look out for is, after we've seen this displacement in price, this displacement in price should run through and create a break of structure. You understand? So there should be a break of structure towards the upside. So in this area, there should be some variations. Why? That's why I say there are some things I left out in this video. But I want you, that's why I say think conceptually. You know what I'm saying? Usually, what you want to see is a break of structure. So think like what you are seeing in this video. I don't want to create confusion. Just think like what you are seeing in this video. Once there's a displacement, the next thing you want to look out for is a break of structure. I'm going to give examples and you're going to understand what I'm saying, but I want you to have the idea like a rule of thumb in your mind. So once there is displacement, the next thing we want to see is a break of structure. So once the break of structure happens, the next thing we want to see is a retracement. Now this retracement is going into an area of liquidity again. Now, mind you, price tapped into the first area of liquidity, which is the point of origin, create a displacement. Now this displacement led to a break of structure. Now immediately this break of structure should see a response in price, more like a retracement, more like a pullback. Now what is this pullback all about? What is this pullback all about? It's trying to get us into a area of liquidity. You know what I'm saying? Mind you, in the video I uploaded recently, I said we want to see price start respecting one side of the market and start taking the other side of the market. So this retracement should tell us the area that price is willing to respect this new point of origin. You understand? So once it taps into this liquidity and doesn't take out the previous low of the former liquidity, then it tells us, okay, that there is what? Institutional sponsorship in the marketplace. So a quick response from this new area of liquidity caused by this retracement will tell us that there is an institutional sponsorship in the marketplace. And after that, once we have identified that there's an institutional sponsorship in the marketplace, the next thing we want to do is start pulling out our entry plan, our entry strategy. That's where your tools like the market maker sell model, market maker buy model, the different templates of selling and buying, start pulling out your risk management. So that's when all these things starts working out. Yeah, so that's your entry plan and strategy. Then probably at the end of the day, you have to have an exit plan also. You understand? Because everything that has a beginning must have an end. So, but between the line from the time period of your entry to your exit, there's always known there as trade management. So sometimes price may not get to your original planned objective, which is where your exit plan is. So you need to know how to manage your trade within that time period, depending on your style of trading. You understand? So with that said and done, let's just get into some examples. So looking right here on the charts, we have here displayed the dollar index. So this is the dollar index, and it's obvious that price has been rallying upwards. You understand? So price has been going up. We've been seeing a bullish dollar, you understand, in this piece of price action here. You understand? So everyone can agree that institutional order flow has been bullish. So this price action is all the way from April 2022 and all the way to March 13th 2022. So everybody can agree that, okay, the institutional order flow is what? Bullish rather. So let's just say this is what we met in price. So there are many instances of where we can expect price to draw into. Because what we want to see next now, we want to see a pullback. You understand? So we're waiting for this pullback, you understand, to be able to get our entry. You understand? To be able to get in sync with the institutional order flow. So price could let me get this. Price could retrace to this low, or to this low, or probably to the imbalance right here, and all of a sudden to this particular fair value gap right here, or probably to this order block right here. You understand? So price could choose any area of this liquidity to be its point of origin, but we don't know that yet. You understand? So all of a sudden we wait and we saw this printed out in price. So this particular price action printed out in price, and we saw that the moment that price printed this, there was a response in price to the upside. You know what I'm trying to say? So That is shown here in this particular slide. So you can see that immediately when price tapped into this particular fair value gap right here, there was a quick response in price. First touch, then second touch, automatically creating what? A response in price higher. So this lowest low here tapped into this high here. You understand? But I want you to think in terms of area of liquidity, the fair value gap. So the moment price tapped into the fair value gap, we saw a response in price higher, trying to get for this swing high here. You understand? Because it was this swing high that created these down moves right here. Why? Because immediately we see price trade into our area of liquidity. Here becomes our point of origin. So what's the next thing we're going to look at? We're looking for a displacement in price, and that displacement in price is what we saw right here in price. You understand? We saw price expanded higher, trying to go for that swing high, to take out that swing high, which will eventually create a break of structure. But at the end of the close of the day, it failed to get to that high. So it tells us, okay, there's an institutional sponsorship in this area of liquidity. So we mark here as our point of origin. So the next thing we want to look out for is a quick displacement in price to take out this swing high. So if we see a quick displacement in price taking out the swing high, then here is confirmed as our point of origin. Then we have seen a displacement and a break of structure. So let's see what price does eventually. So price expanded higher, taking out that high. So this is a quick displacement in price you want to see. So once this quick displacement in price happens and takes out that swing high right there, the next thing you want to look out for, what? For a retracement. Where? You want to see a retracement into an area of liquidity. An area of liquidity not to this low, because if it comes to this low, it has violated the point of origin. Then the institutional order flow is bearish. But now we are trying to catch an institutional order flow to the upside. So we've seen price tap into our point of origin, which is this fair value gap right here. You understand? Created a displacement in price with this particular candle, but failed to get to this high. Now the next candle created that displacement in price. You can see the body of the candle. There's so much power. It shows that there was a lot of trading action that happened in this particular area of price action, and it took out this high. You understand? So now price takes out this high. Now we have seen three confirmations for our point of origin. We have seen tapping into an area of liquidity, displacement in price, and a break of structure. You understand? So the next thing we're anticipating is a retracement, and this is what we have. And this retracement is into where? An area of liquidity. What can you see below here? An order block. So this is a bullish order block. So price trades into this bullish order block. So now immediately we see price retrace into this bullish order block. We want to see a quick response in price, also telling us that price is going to start respecting higher prices, and that which is right here. And this is what we have. We see a response in price over here. So price responds, I want to say higher. You want to say with this candle right here, you get. So once we see this kind of response in price, it tells us yes, smart money is present in this move. And mind, this is the dollar index. So it tells us that yes, smart money is present in this move, and we can go in there to start looking for what? Higher prices. So what we're going to do is we're going to drop down into the lower time frame on the 4 hours. So that was the 1 hour the daily time frame. So this is the 4 hours. So right here, as you can see right here, this is the break of structure that was taken out with this candle. You can see the power of this candle on the 4 hours also. So this was the area of liquidity, the order block that price retraced into, and you can see the quick response in price on the daily charts also now transposing to the 4 hour chart. And down here is our point of origin. So now what we want to do now, we start bringing out our entry strategy. So mind you, price moves from an area of liquidity to another area of liquidity. Is that not so? So now the next thing we're looking out for is an area of liquidity that price is going to trade to, because mind you, we want to start catching prices that's expanding to the high side. So we want to see prices expand to the high side. So all we're looking for is sell side liquidity that price will trade into. Take note of that word. We want to see price trade into sell side liquidity and take out buy side liquidity. So what do I mean by that? We want to see price retrace into an order block on the sell side, a fair value gap on the sell side, a swing high, swing low on the sell side, either taking it out, then use that liquidity gathered at that area to expand higher, taking out higher prices, but respecting lower sides. I don't know if you understand what I'm saying. I pointed it out in that other video I did earlier this month, when I say about market direction. I say you want to see price respect an area of liquidity, that's either the buy side, and you want to see price take out the sell side, or you want to see price respect the buy side and take out the sell side. You want to see price respect the sell side and take out the buy side, just vice versa, depending on how you want to view it. But in this place, I'm giving you a rule of thumb how you'll be able to get to that area. You understand? So I've given you a walkthrough. So from this area now, you want to start seeing price respect the sell side and take out the buy side. You understand? So let's see what price does later on. And you see price traded into what, this order block right here. Price traded into this order block here. So this becomes our entry, because we can see a response in price. And this is also a candlestick confirmation right here. This is a pin bar pattern, a pin bar pattern rather, and it happened immediately. Price traded what, into this order block right here. You understand? So you can say, why not this order block? This particular order block is actually stronger than this order block. You can see the strength in the body of the candle. So that's why we're using this particular order block and not these small ones here. You understand? So, and immediately we enter, that becomes our first entry, that becomes our first exit. So we want to see price, mind you, I say we want to see price what, respect lower lows. You understand? Lower highs rather. We want to see price respect lower highs and take out what, higher prices, swing highs. You want to see price respect swing lows and take out swing highs, and that's what you can see here. So price retrace into this area. This becomes our entry. Price expands higher, taking out our first position here on this swing high. So this can be your first portion of trade. You get, mind this on the 4 hours, so this can be a day or two worth of trading. So you enter here, you exit right here. So this is your first entry and your exit. So the next one will be this. So this will be your second entry. So once we saw price take out this high, price retraced into where, this order block right here. And mind you, what can you see over here? You can also see fair value gap, 1, 2, 3. This is a fair value gap, you want to say. And if you look here too, you can also see double bottom right here. So price had 3 liquidity areas it used to confirm. You want to say that price was going to go bullish, and immediately price traded into this order block right here, this series of down close candle, all of them together. We saw a quick response in price, telling us that price want to aim for higher prices, and this becomes our second entry. You understand? If you were to catch it so precise, mind you, I talk about casting precision, you drop to the 4 hour and 1 hour time frames, but I can't point that out now on this video to avoid making it longer. So this becomes our first entry. Once that place becomes our first entry, that will be our next exit. So you can see I marked out this exit here with a red line. Why? Because this area now in this whole range from this high here to this low is our equilibrium. So it's a very sensitive area, so that's why I marked it out with red. Why? Because you're going to know why in a moment. Because when price trades into equilibrium on a particular price range like this, from this high to this low, price has gotten to what's it known as fair value. You know what I'm trying to say? This is not a fair value gap, but price is considered to be fair valued. So the smart money guys can either take money downwards, you know what I'm saying, take price downwards from this point onwards, and ignore the rest up move. You understand? So you may be insisting that price go higher, you understand, but price may choose to go high. You may insist that price go higher rather, but price may choose to start going lower. You understand? Or start seeking lower prices once it gets to equilibrium. So from this high right here to this low right here is the equilibrium. So, but this was our area of what, our target area when we entered at this area. This was our entry, this was our exit for our second portion of the trade. You understand? So, and you can see a quick response in the sell move. You understand? There was a quick response telling us that price, there's a how will I put it, there is an area of value here. This area is a sensitive area in price, so that's why you see immediately that price tore through this area, taking out these highs. There was a quick response downwards. You understand? Telling us that this area is a very sensitive area, so anything can happen in this area. So once you get to equilibrium, especially in a price range like this, when identifying institutional order flow, you want to be very careful to avoid price reversing against you. You understand? So I think that's one nugget you can also take home in this particular lesson. So let's see what price does later on. So price retraced actually, so you want to wait for price to show you strength. You understand? So this is strength in price, telling us, okay, we are not going to seek lower prices, we're going to start continue to seek higher prices. So once we see this strength in the marketplace, here becomes our entry, our third entry. So we are entering from an area of fair valued price, which is at equilibrium of this whole price range, right, from this high to this low. So here is our fair value. So we're entering from this area. So where are we targeting next? We're targeting this high, and let's see what price does. Price takes out this high. You know what I'm saying? Takes it out. You can see the strength in taking it out. Why? Because once price says agrees to go above the fair value, I don't think price want to wait. Price want to rally straight to its objective, and you're going to see that happen, unfold later on. You can see that when we took out this particular high here in this particular candle, there was no opportunity for price to retrace. Why? Because once price show a willingness to go above this equilibrium, price will not show any willingness to wait. There's no waiting. Majority of the times, price want to rally to the objective, which is this high over here, the highest point, the highest objective of the total range. So that is institutional order flow on the buy side. So I know I kind of rushed through the video, so you can watch it a couple of times to practically understand what was being shared in this video. You understand? And I'll be still drawing our attention to this particular video going on this channel to make us better understand institutional order flow. But I want to just tell you, mind you, we had 3 opportunities to catch a trade. You know what I'm saying? Probably we didn't get a lot of probably if we had exited at this high here, would have missed out from this point onward to the main objective. Definitely. Why? Because when price took out this high, when price took out this high right here, you understand, when price took out that high, there was no opportunity for price to retrace before taking out the main objective. So probably you'd have missed out on that last portion of the move. You understand? So I'm going to be giving out a concept to be able to catch that particular area, but that will be later on this channel. You understand? So, but the truth is that if you had taken your trade from the moment you identified your institutional sponsorship at this area right here, you identified your institutional sponsorship and you waited for this retracement. Let's say you are taking your trade from this area and you believed in this move and you had held it. Let's see how much you would have made. You'd have made 2,900 pips. So that would be, if you were trading with $1 per pip, you would have made $2,900. If you are trading with $2 per pip, you would have made 4,000 or around 5,000 plus dollars. You understand? So depending on the risk management or the risk appetite that you have or your trading capital, that determines how much you would have made on this particular move just by understanding institutional order flow. You understand? So you see the power of knowing where smart money is actually moving price to. You get? So it's very, very important to really know this. So let's just say you didn't get to catch the whole move from, because I'm not saying go in and start anticipating this kind of move, especially for new traders. Don't try that. You understand? Don't try to hold trade for this long. You want to make your money work for you. You want to get in and get out. You understand? Except if you are a swing trader or a position trader, then this kind of amount of move will be okay for you. Because from this point of entry right here, this is on the 6th of June, and by the time this main objective was met, that was 13th of June. So that's practically 7 days of waiting. So most of us don't have that great deal of patience. So, but let's just say you didn't follow that move. You were at this region, you took your first movement here. That's money for you. You waited for the second one to happen, and you took yourself. That's another one for you, and you waited for the third one. This is another one. Won't you be comfortable? Because at these portions here, this is probably 500, 500, 500. So you'd have caught practically a total move of 1,500 pips in the marketplace. So that will be also reasonable, especially for a new trader, an aspiring trader. You understand? So don't say, okay, I have to catch the whole move from bottom to the top. You understand? To be able to catch 2,900 pips. Until you do that, before you be satisfied, probably you go into the marketplace and burn yourself. You know what I'm saying? So you want to cut that greed. You want to kill that greed, you understand, and really anticipate the marketplace by taking partials, you understand, because anything can happen at this area of equilibrium. Anything could happen there. What if price decide to reverse at that area of equilibrium? Anything can happen. You can go in your price chart, identify institutional order flow the way I've shown you, and you can see majority of the times once price gets to the equilibrium, it can actually reverse. You understand? A price that was poised to go higher eventually reverse against you in the equilibrium level. You understand? Because that area is termed Fed valued. You understand? That is where buyer and seller actually agree. You understand? So I hope you found value in today's video. You can watch this video a couple of times. For anything you don't understand, maybe I went through too fast on this video, you can leave the question in the comment section, or you can also email me at fxtruthacademy@gmail.com. I'll be sure to get to you. Or you can also connect with me on Facebook at FX Truth Academy Facebook. That's www.facebook.com/FXTruthAcademy. Though I'm leaving the all links of this social media connects on my on the description box below or somewhere in this video. So you be sure to connect with me, ask me your questions, and I'll be sure to answer them, probably in a video or personally, depending on how I feel like answering them. So I hope you find value in today's video. Make sure you hit the like button for those of you that have already subscribed, and for those of you yet to subscribe that found value in today's video, make sure you hit the subscribe button, and I'll see you in the next video.